We are live. Welcome, welcome, welcome. This is Matthew Struck with Build Your Bottom Line.
Had to look it up.
I almost said build your bedroom better. I don't know why I said that one, but yeah, build your bottom line.
Yeah, we're here to talk about interior decorating and all the choices you have for bedding.
Exactly. I was going to say you've moved locations, Alan. You look like you're in the lap of luxury now.
I am, as long as I don't poke any of the wall behind me.
Yeah. As the screen doesn't fall down on you. Well, for those of you who may not be familiar with this show, my name is Matthew Struck. My partner in crime, as always, is Alan White. Build Your Bottom Line is a show put on by Treadstone Risk Management. We are here talking about real estate development, construction, investment, and everything contractors, property management, everything in between when it comes to real estate. We are based out of New Jersey, but we write in multiple states throughout the country. And this week we are talking about, and every single week we're coming at you live Monday night at 6:30 Eastern. So mark your calendars, subscribe, hit the notification bell, comment. We can see your live comments or ask us questions. We will answer them live. But every single week we are coming at you Monday at 6:30. This week we are talking about contractor insurance, the top types of contractor insurance that contractors should be worried about having. Or if you're on the flip side of this and you're hiring a contractor, these are the types of insurance that you should be looking for your contractor to have, both GCs and subs. So we got a handful. I didn't number these out. Looks like we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We got a dozen coverage lines that we decided to highlight. And you got the first one to kick us off. So what do you got, Alan?
All right. So the first one I got for us today is the main one, the most important one, the one that everybody should have, no matter what you seem to think, general liability.
Yeah.
And I'm looking at contractors. I've talked to a lot of you. You need it. Don't play the, it's okay, I got cash in the bank.
Yeah. Or I'm an LLC, I'll just go out of business, right?
Yeah. You can still do that and they'll still sue you.
Yeah. What's crazy is I think a lot of folks think that if they're an LLC, it like allows them to escape the personal financial fallout that could come from something happening, but that's not always the case. Depends on the state. Some states that you can come after your personal assets for that stuff.
Yes.
I'm not to single anyone out, but I've had many a drink in a watering hole with roofing contractors and the like, talking about how the insurance was too expensive, so they just decided to go without it. Not a good move. Not a good move whatsoever.
Or the popular ABC landscaping becomes BCD landscaping because, hey, don't worry about it.
In a former life, we had a client who had to do just that, move the assets of the firm to a new entity. And the new entities that they moved the assets to, mostly the trucking equipment, was named after the dogs. So PD LLC now all of a sudden owned all of their heavy equipment and their trucks. But yeah, general liability is a good one. I think in my notes, what I put down was a big distinction here is, first of all, you want it occurrence-based, okay? So a lot of people don't understand the difference between occurrence and claims made, but the big difference is the occurrence base is, if you had a policy for 2020, but then you get a claim in like 2025, the policy, but it, originates in 2020, the policy that you had in 2020 pays. If you have claims made, you have to keep continuous coverage through when that claim is discovered, and it's whoever's on, insuring you at the time that covers it. And then the other one is per project versus aggregate. I'm sure you've run into this one, Alan. Per project is a big one because a lot of contractors just think they need like an aggregate limit of coverage, but that's not always the case, right?
No, and I mean, most of that is always going to come down to size of the project. A lot of times it also comes down, if you're working as a sub through a GC, a lot of times it's going to be whatever that GC's requirement is going to tell you. Some of this stuff is, is up to you and how you want to run your company, and some of it is depending on who you're working with, it's not necessarily up to you.
Right. Yeah. And that's a good point. The size is a good one, especially if you're hiring a GC. I mean, if you're a big contractor, obviously you're going to want sufficient limits to cover at least each one of your projects or all of your projects in aggregate. But if you're hiring a contractor, that's the other thing you got to remember. If they have 10 jobs and each one of them is, a $20 million job, I doubt they're carrying 200 million in limits, right? So the question becomes, if they don't have a per project limit that they're covering, you got to be worried that, if they have a problem on a couple of other projects, that maybe they don't have any limits left to pay if there's a claim on yours. So that's a good one to remember. Let's see. The second one, is that all you had to say on GL? I mean, I think most people get GL. It's like fall with contractors. It's like stuff falls down, right?
Yeah, well, that's the one where most of any contractor out there who's got his license wasn't allowed to get his license without it.
Yeah.
I mean, the big thing is if you do the claims made and something happened a couple years ago, your insurance company will go back and see if you had coverage for it. They're not going to take your word for it.
Yep. Yeah. That's a really good point. Yeah. So one that I had that's kind of like not necessarily a standalone coverage, but one that can get tacked onto that GL policy is railroad protective liability. This is something that's kind of like really niche or really nuanced, but a lot of people don't know this. If you're doing work within about 50 or 100 feet of a rail line, you need railroad protective liability coverage. So that's something to keep in mind, especially if you have, a housing development or something like that that's going in next to a semi-functioning rail line. You always have to remember that, you need that add-on to the GL policy. And that's really just liability associated with, if the contractor mucks something up or if you as the contractor muck something up associated with how that rail line operates. Pretty cut and dry. You got the next one. What do you got up next, Alan?
Oh, let's see. I got the other fun one everyone loves talking about, commercial auto.
The one that's been excessively cheap as of late.
The one that I don't know if it's been excessively cheap or if a lot of these insurance companies have changed the premium structure so that they can get you to pay, so they can trick you into paying for the cheap one so that they can deny the claim when it comes.
I think a lot of people have been driven to the cheaper options that don't cover very much because of it really comes down to distracted driving, believe it or not. It's like, people driving around, and it's not always the guy driving like the roll off or something that's at fault. It's the people that are driving around with no coverage in their personal vehicle and they're texting and driving or something like that. And they run the guy in the roll off the road. And there's just no insurance or financial assets to go off of. Right. So that's a big one. So that's been increasing the price of commercial auto for, I think, going on the last 2-3 years now, just to ungodly amounts. One thing to remember there is the distinction between heavy equipment and what would be covered under auto liability policy, right?
Yes. Yeah.
Yeah, get your wire straight, would you?
Commercial auto and heavy equipment are in fact two different things. They don't look at them the same way, and just because you have an auto policy does not mean any of your equipment, your external equipment is covered. Even if you just have it rolling on a trailer, it's not covered. The trailer's covered, the equipment not so much.
Yep. Yeah, and from a liability standpoint, too, the operation of the equipment, that commercial auto policy is not going to pick up for that thing when it's on the job site, right? That falls on the GL. But as soon as you start driving it on a roadway, and so the insurance language parlance is, comprehensive motor vehicle or compulsory motor vehicle laws is basically what it comes down to, right? As soon as you have to have it registered and plated, and it's got to have turn signals and brake lights and all kinds of other stuff to be operated on a roadway, that's when it falls onto the commercial auto policy. Now, interestingly enough, sometimes you can have something that's covered under both, and it depends on how you're using it, right? Like, so perfect example is anyone who works on, say, like power lines or has a boom truck. If it's stationary and anchored and you're using the boom on the roadway, that's still technically mobile equipment. It's not being operated as a vehicle. But if you pack everything up, the second you start to basically operate it as a vehicle, that's when it falls under that commercial auto policy. Let's see here. Well, workers' comp's a fun one. I got workers' comp here, and employers' liability. I'm gonna test your knowledge here, Allyn.
If they fall off a ladder, bury them where they fell.
Yeah. Unfortunately, I think a lot of contractors have that perspective. I would really worry if they do, but let me test your so workers' comp, typically there's state minimum rates. Okay, so you always have at least the state minimum rates. I would advise higher depending on what kind of work you're doing. But typically workers' comp comes with something called employer's liability added onto there. Did you ever cover, Allyn, why EL is on there? Like, a lot of brokers don't even think about it, but do you know what the difference is?
No, that's something that's not even, that's not even taught in the classes to get your license.
It's not. So what this is like, I'm totally insurance nerding out here now. Did you ever hear the story of the watch dial painters? Like, it was mostly women. They worked in factories. I think it was like turn of the century, coming into the 20th century. And they would lick the brush, right? Yeah. And then they would dip it in like this fluorescent ink in order to paint the watch dial. Well, the problem is that ink was carcinogenic. Okay. So a workers' comp injury, people think the traditional workers' comp injury is like guys on the roof, falls off, breaks something. That's a covered workers' comp injury, which is correct. Okay. What they found was that there were all these other injuries that weren't like a moment in time. Like, it wasn't someone tripped and fell or like picked something up and hurt their back. It was this like constant exposure over a period of time based off of what kind of job they had. So like that, like constantly ingesting a carcinogenic ink, then precipitated the insurance market, creating employer's liability. So that's why you have those two that are put together. Like, workers' comp is the like, holy crap, something just happened. And then the employer's liability is, someone comes to you 10 years later and they're like, what's a good example? Oh, like anyone who worked in like the Navy or the Merchant Marines and they were exposed to asbestos, right? Like, that was exactly the case for that kind of stuff.
Speaking of that, you know where that's going to start coming in handy now in 10 years?
Lay it on me.
Silica. All these masons and concrete cutters that have been breathing this stuff for decades, that's going to be the next one. And we're probably going to, you're already starting to see the commercials on TV. Call now, there's a fund set aside for, and the typical ambulance chasers. And
they that's also why OSHA doubled down a couple of years ago on a lot of the respiratory safety, right? Mm-hmm. Because of the silica and stuff like that. I think it also had to do with the Chinese sheetrock issue that happened a handful of years back too, where there was all the basically the carcinogens and other things like that, the chemicals that were in the Chinese sheetrock. So yeah, that's a big one. I'm also wondering what COVID is going to be, based off of that kind of long-term exposure piece of it. I don't know if it necessarily applies to contractors that much, because in most cases you're in an open air job site, or you're not necessarily like, 20 people huddled together working on something, right?
I think it's going to be more for the office workers that have been stuck working together for 6-8 months now, or even the grocery store workers. Yeah, definitely. Like any of those, like, essential workers that had to be in kind of like confined space and things like that. There could be some of that, down the road kind of stuff. Interestingly enough, so we will have some specific episodes coming up in the near future, not necessarily on these lines of coverage, but on these types of scenarios where it's like, you're a contractor and you have, administrative staff, or you have even, guys on the job site. What do you have to do in terms of COVID and family leave and all that stuff that's related to it? All right, that's pretty decent. I think we beat that horse to death. What do you got as the next one? Oh, hold on here. My computer scrolled on me. Excess liability.
Oh, there we go.
Ironically, I had to drop down to find it.
Yeah. Well, yeah, you were talking about before how like a lot of contractors come to you and they're like, "Hey, just give me GL," right?
Yes.
Or like make it as cheap as possible, right? Like I don't want to pay anything like $1 more than I have to.
Don't worry about it. Our biggest job is only $1,500.
Yeah.
That's nice, but the house that you're doing it to is $300,000.
That is a fantastic analogy. It's like what's a good example? It's the plumber, right? Who's doing like hot fit piping. You're dealing with fire, and if you're in a multi-million-dollar structure, you do the math. Like, what could the ultimate damage be? Well,
I can tell you because it happened to us when we were putting in a sprinkler system. And we thought we had gotten all of the insulation out from around the pipe. We started working on it. There was one piece we didn't see, and all of a sudden we were.
Mm-hmm.
And we look, and there are these little embers starting to climb up the back of the wall.
Yep. Yeah. And in that moment, you're one, wondering where the water is, and two, you're kind of doing the math in the back of your head.
I always made the guys have one of those little tiny, like little hand squirt fire extinguishers next to them, because let's be real, they aren't there. They don't really care. They're there for the hourly rate. And
well, that's also true. Yeah. So that's also something that we don't talk about a lot. Like, look, first of all, contractors need good workers, right? And we're going to talk about that in the future too, like how to find decent workers, how to find, high quality tradesmen and things like that, even how to find high quality subs. But those guys that are on site, especially if they're like temp or like day laborers or something like that, right? They don't really get drawn into it. Like if everything hits the fan, like what are they out?
They can be the same guys that have been with you for 15 years too. I mean, it's you got to remember something. As the business owner, you have that level of care. You have your whole life sunk into it. The employees, no matter what you think of your employees, you're their paycheck. I mean, that's sometimes you gotta take that hit to the gut and realize that they're not your friends. They're not going to come over and hang out with you at Thanksgiving. You are their livelihood. Yeah. And so they are there to get the job done to your satisfaction. Doesn't necessarily always mean that they're doing it correctly, safely, efficiently.
And they don't have to deal with the fallout from it, right? You know, that's a big take home. All right. Just to kind of like round this one out, some of the notes that I wrote down was just make sure if you have an excess liability or an umbrella policy, make sure it has follow form coverage, meaning the underlying policies, like if it sits over your GL, if it sits over your employer's liability, over your commercial auto liability. Follow form means like whatever's covered by that primary policy is covered by the excess policy. So that's not, more stringent or more strict than the first policy that ends up responding. And then the other one is drop-down coverage, which a lot of people don't talk about. So drop-down coverage is, say you have something that's not covered by the underlying policy. A lot of excess policies or umbrella policies will actually drop down to cover it. They might have a big deductible on that, but at least you have some kind of coverage as opposed to being completely, SOL on it. All right. The next one I have is pollution. Have you run into this one much, Allyn?
Sort of. The couple of times we were covered under a broader policy that was basically held by the GC. Because mostly what we did was, two of the companies I worked for, we did a lot of sub work for larger companies. So, there were some places where you had to do your own cleanup. If there was a spill, you might as well just go out of business because they're going to put you out of business. They're going to blacklist you from everywhere. But yeah, I mean, we never actually had to carry a pollution policy. It was usually carried by somebody else.
Yeah, that's a good point. So a lot of times the the GC or whoever kind of like the main contractor is, sometimes even, you know, whoever owns the project will pick up the pollution policy for it. The one thing to think about is it's both first and third party. I would actually say the third party is probably at least equally as important, right? So like first party is, you know, something spills on the site and, you know, DEP shows up and they go, hey, you got to clean this up before you can keep going, right? You know, and you have to worry about backfill or remediating the dirt or getting rid of it or whatever. The other problem becomes that, you know, say that spill or an oil tank or something like that ends up leaching or leaking onto someone else's property and causing property damage or making them sick because it gets into their water or something like that. That's also a big consideration. So you always have to make sure that those pollution policies are both first and third party to make sure that they're taking care of both of those possible situations. If you live in a state like New Jersey that has some pretty crazy like dumping laws and legislation and things like that, you know, and any of these sites that are basically pulling in, you know, thousands and thousands of defendants to get them to pay for the cleanup, you know, you need a pollution liability policy. You know, anyone who's going to be disposing of anything that can be considered, like, just put it this way: a lot of plumbers forget about, say, like you're removing lead piping, right? What do you do with the lead piping afterward? Well, if you're giving it to someone else to take care of, the problem is a Superfund site, if they just dispose of it somewhere in like a landfill, they could come back and pull you into it, right? And that policy in a lot of cases is just paying for the legal expense. I mean, Jesus, there have been gaggles of lawyers that have made ridiculous amounts of money. A lot of kids have gone to Harvard and Yale as a result of Superfund sites. So that's really what those policies are there in place to pick up for. Yeah. All right. You got the next one, Alan. What's up next?
Professional liability.
Oh, this is a good one.
Well, most people should know it as errors and omissions.
Mm-hmm.
Most real estate people, this is what they should carry with them at all times, regardless of what they think. Mm-hmm. Especially if you're in the home inspector business or the what's the other one? Appraisal business, home appraiser business. Mm.
Yeah, or any of those contractors that have in-house architectural drawing. Yeah. Right. Like anytime you're doing structural plans, right?
Yes.
Yeah. That's like, yeah. I always wondered why anyone would in-house that stuff. Like, I get it. I understand you can include it in the fee or it's like a value add or something. But from like a risk management standpoint, I would forgo the little bit of profit by bringing it in-house to just have like a really good architect firm that gives you a decent rate because you send them volume, you know, doing that stuff. I don't know. Maybe I'm looking at it the wrong way. I'm like, can you think of another reason to kind of like in-house that stuff? Obviously, that's fine if that's your business model. Like,
well, I mean, it depends. It's going to depend a lot on the number of projects you're doing per year because you can use a lot of these architecture firms that you're thinking of. It's one or two guys sitting in an office, and 90% of the time they're overloaded already. So if you're trying to come at them with 10 projects, 20 projects a month that you're trying to submit for bidding, you'll lose out if you don't have somebody sitting at a desk in your office that says, all right, here it is, it's ready to go, take off.
That's a good point. Yeah. And in that event, I would say
engineering firms is another one where it's just, it doesn't pay to have somebody outside doing it for you.
Yeah. Well, and if you're doing any kind of testing in-house too, right? Like any kind of testing, whether it's soil testing or if it's structural integrity testing or whatever you might be doing, that's also a good point. That E&O coverage, it basically covers you for something that, like, you can think of general liability as kind of like slips, trips, and falls, or something happenstance happens. E&O, professional liability, is you had one job, like that's the meme, right? You had one job, right? Like that's your job. And if it's in your wheelhouse and you screw it up, that's E&O, that's professional liability.
Another great way to look at it is it also covers you for the things that somebody doesn't tell you about or that they didn't ever tell you to look at in the first place. And then they could, because in society, we love to sue people. We will look for any reason to sue somebody.
Mm-hmm. Oh yeah, yep. Especially if it doesn't get brought up beforehand, and they're like, "Oh, well, you should have known that." Yeah, because I'm omniscient. I know everything. Right?
Yeah.
All right. This next one's kind of like, how should I put it? It's like it doesn't come across all that often. This is mostly for larger contractors, but an OCP policy, okay, or not necessarily larger contractors, but contractors that might work on a big development where, say, like the development owner or the project owner has a liability policy, but the liability policy has like a huge front end deductible or retention on it. Okay, so say they have like a $500,000 or $1 million retention on the development owner's policy. Sometimes the owner will require the contractor to take out specifically a $500,000 or $1 million OCP policy, owner contractor protective liability policy. And part of the reason why is because, one, you want money that's dedicated to filling up that retention, right? The second part of it is if you're a big developer and you have a contractor that, like we said before, has, a dozen other projects running, and they run through their aggregate coverage on their other main general liability policy, this policy kind of like soaks up your deductible so that when your insurance company goes, hey, like ABC contractor, your insurance needs to pay, and they're like, sorry, I got nothing. I had like 5 other jobs that fell apart or caught on fire. They at least have one dedicated policy to fill up their retention. And then the insurance company, their insurance company, picks up for what can't be covered by the contractor if the ag's, used up on their general liability policy. Really boutique. I've run into it mostly on the public sector side where it's like a county, right? And the county's having a building built, and it's like a $15 million building, but the county's policy has $1 million deductible or retention. And so that's why they make the general contractor carry that extra policy, and it's a one-off for the project too. So that's what the developers love, is it's this one-off that's basically paid for up front, and it's a $500,000 or $1 million that's just sitting there available if something happens. So that's a really kind of niche one, but larger developers love to ask for that one if they don't have an overall OCIP policy, meaning owner-controlled insurance program, where you basically have to buy a piece. But that's basically almost like a how should I put it? It's like a trust or something like that that's set up for the one development. All right, what's the next one? The other next one's structural, right, Alan?
Builder's risk.
Yep.
Builder's risk.
Exciting. Right. What's your experience been with this one?
Surprisingly, I've never actually needed to pull one of these, mostly because what we were doing was kind of always covered under either some kind of environmental or general liability that we had to worry about.
Yeah.
Builder's risk is really I don't know, every time I think of it, I always think of it more for the home builders, home flippers. Guys building all the 9 million skyscrapers all over Jersey City right now.
Yeah.
all the giant skyscrapers going up in Hackensack, but God forbid they put any parking in Hackensack, so good luck with that.
Yeah. No, and it also depends whether or not the development owner picks this up, right? So it depends on the bid. If you're used to bidding on jobs, right? If you're a contractor that goes out to bid on a lot of this stuff, you've seen it both ways, where the developer, the property owner, the project owner takes out the builder's risk policy, and they just have to name who the GC is going to be on the contract. So the insurance company knows that it's like not like Joe Schmo and this is their first job and it's like a $10 million building. But sometimes it's that way, and sometimes it's the other way, where the contractor does have to take out the builder's risk policy, and it's really just a property policy. And sometimes contractors will actually have a GL policy, and you might have run into this, Alan, where they'll actually tack on a builder's risk either to the GL policy, or they'll tack it on to some kind of master builder's risk policy throughout the entire year. And they just kind of like endorse on projects as they go and then take them off once they're done. But really covers the structure while it's going up. So like, if it's half done and all of a sudden it catches fire or like falls apart. The one thing to remember, I think what a lot of contractors forget on the GL side is they think, oh, I don't need a builder's risk. I have a general liability policy. Well, the first problem is the GL policy requires that the owner of the project sue you, okay, to get money back. Like they don't just automatically cut a check like a builder's risk policy, where if the building catches on fire, they actually show up and write a check. But the other angle is that on that general liability policy, a lot of time there's something, maybe you've run into this, Allyn, it's the your work exclusion. Have you seen this kind of come into effect from time to time?
No, not for any job we had. God forbid they ever excluded us from anything.
Well, yeah. So it's one of those things where a lot of policies have taken it off, but some standard policies, like a standard ISO GL, sometimes still has it on there. The your work exclusion is like the example that they give you during like licensing and stuff is always say you're like an automobile mechanic. Okay, it doesn't exactly apply to contractors in real estate, but say you're an automobile mechanic. Someone brings you their car, you replace their transmission, right? Or maybe you like fix something in the drive shaft, and then the client pulls the car off the lot, right? And you did something shoddy or forget to attach a bolt or something like that. And whatever you worked on eats itself, and then it causes other damage, right? Like it causes the engine to seize up, or it causes, some other part of the car to be damaged. Well, what a lot of people forget is that your work exclusion excludes what you actually worked on, because the insurance company is like, look, you were supposed to know what you were doing, right? So whatever you worked on, we're not going to cover replacing that. You have to dip in your own pocket. That's basically kind of like your deductible. But everything else that happened, like when the wheel fell off and they got into a 3-car pileup, now the insurance company's like, okay, we'll take care of that. But that wheel that you replaced, we're not replacing that.
Don't get me started on auto insurance.
Yeah, but take that and then extrapolate that to like, a $10 million building where pipes were put in incorrectly, so there's leaks all over the place, or God forbid you have a short in the wiring and the entire thing goes up. That your work exclusion is probably one of the biggest reasons why it's also really stupid to try and fall back on your GL policy thinking you don't need to take up a builder's risk. And any of the project owners out there, that's why you got to require builder's risk. Sorry, I cut you off.
Oh no, it's fine. It's the one thing that always drives me crazy whenever it came time to discussing the renewal of an insurance policy. They always like, well, can we take this out? I'm like, no, stop touching things. Just leave it alone. If anything, add to it, because something's going to happen and I need my job. So
yeah. Well, and the business has to stay in business, right? Like that's the other piece of it. Yes. But yeah, that's a good point. Let me see. A couple of these aren't really like construction related, but I threw them in just because they're obviously a good thing to have. One of which is cyber liability. Not really huge if you're not taking like orders online or anything like that, but pretty much nowadays anyone who has a website or takes any kind of payment online should have cyber liability, or for that matter, has internet connected computers that has client information on it. Okay, you need cyber liability. It's just a must nowadays. It's not if you'll get hacked, it's when. All right. And then the other one that I had was employment practices liability and directors and officers liability. This is like the hiring and firing, right, Allyn?
Yeah, well, I mean,
I mean, for you, it was mostly firing, but
yeah, for me, it was mostly firing. Yeah. I always got stuck with the job that the owners never wanted. So yeah. I've gotten really good at it, though. I like to think I've gotten creative about firing people.
Yeah. No, you just got to be like Moneyball, right? Like you just sit them down, just be like, look, management has to restructure, get out of here.
No. I'm more like the Bobs from Office Space. So yeah. He's been collecting his check, so we fixed that problem.
Yeah. Full disclosure, we are not employment practice liability attorneys. We will actually have one on in a couple of weeks, so look out for that one. We'll talk about mostly COVID related stuff, but we'll talk about that one in the future.
Yeah, and we also base most of our conversations on movie quotes. So
that is true. I was actually, before we got rolling on that one, I was going to bring up George Carlin's pink slip bit, where it was like, have you ever gotten a pink slip? I don't think so. Someone just comes around my desk and says, get the hell out of here. But yes, if you have any employees, especially now today's day and age with woke and social justice warriors and the diversity inclusion conversation that we have nowadays, you have to have an employment practice liability policy in place to protect you when someone says that you fired them because you're discriminating, or you wouldn't give them a raise, or wouldn't give them a new position because you're discriminating. You have to have all of that stuff in place to protect you. Yeah. And so the last one, round it out here, Alan. What's the last one?
Oh, all right. I'm full disclosure on this one. I mutilate this word every single time because I call it both surety and surety because I don't know what happens in my brain when talking about this. But we're talking about bonding.
Yeah. just stick with that one.
I swear to God, every time I see this word, my brain shorts out and I just start babbling words.
Wait, the surety is always hard especially when you've had a couple of beers, right? Like at a networking event, it's always tough to say that word.
It becomes slurty, sturdity.
Yes, yeah.
Sometimes it's just
surety. Yeah, bonding. I don't know. Bonding is like so bonding technically isn't an insurance contract. Bonding is like a financial guarantee. Mm-hmm. And I come to think, like, I almost have this impression. I don't know what the history. I should look it up when I have a couple of minutes. But I don't know what the history of bonding is. But it's almost like the mafia came up with this idea of bonding, right? It holds a fantastic place within construction and real estate. Okay, but just like, don't get me wrong. This is like the setup is, all right, I need you to do, like, Alan, you're going to do work for me, right? But I need someone else to vouch for you. Yeah. And if you don't do the work, I need them to kick your ass, or if you jump out of town, I kick their ass. Like, that's basically the way it goes. Like, doesn't that seem like the mafia to you?
Yeah, we can. No, I believe those are called legitimate business practices.
I'm sorry. Yes, legitimate businessmen.
Yeah, legitimate businessmen.
Yes.
Do you have any rabbits in the shoebox?
Yeah.
What size rabbit in the shoebox would you like?
But that's exactly the setup. It's like, all right, you're going to do work for me and I'm going to pay you money. And there's a bunch of different types of bonds that you could have on a job. But that's really the legitimate piece of it. We're getting a third party to come in and basically vouch for you that you're going to do the work, or at least hold you to doing the work that I'm paying you for. And there's a bunch of different variations with that one. The one thing I would say in terms of like placing that type of coverage, it's very much a relationship thing. Like some of these other, policies that we place, you might not have like a long-standing relationship with the insurance company you're with. So like whatever, if one insurance company is not good, we'll just move you to another one or something like that. Surety is one of those things where you have to build up a relationship over a long period of time. So like that's always tough with contractors. You're like, they'll come to you and be like, look, I've only done, single family homes. Now they want me to do, a huge office condo complex. And it's like 10 times the size of anything that I've ever worked on before. I need a bond. And you're like, well, this is going to be really difficult because you've never bonded for anything like this in the past. So we now have to create a new relationship with you. It's really kind of like relationship based.
Yeah.
Much like how when someone asks you to vouch for me, like if you and I didn't know each other, you're not going to vouch for me, right? Like you're going to be like, who the hell is this guy?
I wouldn't vouch for you.
Yeah. Yes. The fact that you know me also means that you wouldn't vouch for me. I appreciate that. But yes, yeah. That's the gist of it. So I think we've covered this one pretty completely. There's some like odds and ends and strange stuff that we could throw in here, but those are really the main.
There's all kinds of little add-ons you can put on every insurance policy that really, at the end of the day, is just money in the insurance company's pocket.
Well, and it's protection, right? Like that's the one thing that I would say is, don't take this as like the end all be all list, right? There's always stuff that maybe we didn't cover, or some of these things might not apply to you, right?
Oh, there's specialty work. There's specialty bids that you're going to get. Government bids are notorious for random requirements in insurance that things you've never even heard of that exist out there that they require you to carry for some odd reason or another.
Oh yeah. Yeah. So the take home is, regardless of whether you contact us or you have a risk manager or broker you work with, like definitely get a professional to look at it and make sure that you're getting the right stuff, you have the right limits, things like that. But that's really the important thing, is make sure they have a professional that you can trust and that you work with pretty reliably. Moving forward next week, I forget if I gave you a heads up. We got Ron Souza coming on from Liberty Office Suites. Liberty actually does the owns and operates the office that I work out of here in Montville in New Jersey. So that should be a good one. We're going to be talking about the state of the real estate market, commercial real estate market, in terms of basically, a short-term rental or on-demand office space and shared workspaces. That should be interesting, right?
Oh, yeah. Well, I mean, now that we're sharing a workspace, and except for today where I'm in my palatial mansion.
I think you undersold yourself. You only gave yourself a baby grand. I think you need a grand piano in the back.
Yeah, I'd go sit down on it, but I'd hurt my face.
Yeah. You might fall through it.
If it wasn't for green screen, right now what you would see is, I think, 2 leftover fast food wrappers, a soda cup, and some other stuff sitting on my gaming computer desk, which is directly behind me.
I thank you for sparing us and our audience from that.
This is the fastest way to not clean your house when you're having a conference call.
Oh, that is a spoof video that needs to happen, I think. All right, cool. So next week, again, Monday night, 6:30 p.m., we'll have Ron Souza from Liberty Office Suites. I think I'm good. We out, Alan?
I am insuranced out.
All right. Have a good night, everyone.